our survey of supply managers for the month of January was very good. Seeing some good, strong numbers. Biggest one-month jump that we've recorded since October of 2009. So the leading economic indicator from the January survey was very strong. Stronger for the upper section, the upper states. That would be North Dakota, Minnesota, Nebraska, Iowa, and South Dakota. Looking better than, say, Kansas and Missouri. But all in all, it was a very good report. It looks now in retrospect like what happened in December was really just a supply disruptions, a hiccup, if you might, as I might say, in that supply disruptions from Thailand because of the flooding was what brought the overall number down for December. So the January number is on path, on course, looking for some pretty good growth for the 9-state region in the months ahead. I think we're moving, we're back on trend. We're likely to see continuing employment growth. In fact, the employment number was very good for the month. I think, you know, it's still going to take us about another 18 months to 2 years to get back to pre-recession levels for the entire region. Now, some states, North Dakota is already back. Nebraska and Oklahoma probably going to be returned to pre-recession levels this year in 2012. So some states are doing a lot better. And that, of course, is North Dakota, South Dakota, Nebraska, Iowa to some degree doing better. Minnesota not quite as strong as the other states. Missouri much less strong. You know, Cindy, as the index, the leading economic indicator, moved forward, the price index moved up there as well. So there's some price pressures there, and the Federal Reserve just last week said, we stand ready, we're going to keep interest rates low until 2014. I say that's a mistake, big mistake. Invites inflation that's too strong, and I think we're going to see commodity prices moving up. And for that reason, it's going to be very good for the agricultural economy. It's going to be very good for this part of the country. So my previous pessimism, if you will, or semi-optimism, semi-pessimism, I'm going to have to throw out the window. I mean, with the Fed moving and keeping interest rates very low by threatening QE3, where they buy long-term treasuries and, in effect, throwing money out the window, we're going to see ag prices moving higher. That's good. So I still, 2012 now is stacking up to be better than what I thought it was going to be last month when we did our interview. Trade numbers looking good. Of course, the weak dollar, now the dollar's strengthened a bit lately. Weak dollar and plus overall growth in some of our trading partners looking pretty good. So exports strong, imports strong, which is somewhat surprising because of higher prices. But companies are still importing. They're attempting to gear up production. Thus, they're importing raw materials and supplies. So that's looking good. We asked the supply managers, what's the biggest threat to your company in terms of purchasing this year, 2012, energy prices? About half said energy prices. We also asked them about what they expected in terms of whether farm income is going to be a driver for their company's business. 1 in 5, a little over 1 in 5, 21% said farm income is pushing and a positive factor for their company. So that's very good. Now, another threat brought out by the supply managers was regulation. Some of the, about 1 in 5 there also thought rising regulatory regulations from out of Washington is a threat to their business for 2012. So those are the two big threats. Number 1, energy. Number 2, rising regulations. But energy at 50% of the supply managers, 20% regulatory environment.